This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. I'm going to give you a stock market update for Friday morning as of Thursday's close. And also, we've been talking about volatility. Well, we're getting a lot of volatility. Let's just see what that means. Also had a big shift in sentiment this week. Pretty important, something we definitely want to talk about. And then I want to talk about how we can look at price structure and trend change in two different time frames at the same time. And we're going to talk about that with the spiders right now and see how that situates us, how we can frame out which way this thing could be going and what the key levels are. All right, let's go ahead and get going. Let me just say, if you want to learn more about these techniques, please check out my book at rabilstockresearch.com/book. Also, if you enjoy the content, please hit that like button and also subscribe. Okay, let's start out with sentiment. And one of the things I wanted to talk about is I use the Investors Intelligence sentiment number. It's the bulls minus the bears. And again, I've been watching this now since really about 1990. And what I would tell you is that when we're in a bull market like we're in right now, where we're clearly making higher highs, higher lows above the 18-month, that we don't need to see more bears than bulls to get a good buying opportunity. All right. What we need, though, is so at this peak up here, it was around 48% more bulls than bears. At this peak, it was around 49%. All right. But what we want to have is a drop in that number, that percentage between 48, it dropped down. I think it was right around 26 or something like that. But it was a pretty substantial 20 point drop in that period, 3 weeks. This time we've dropped down to 28%. You see where we are? It was at 49% 2 weeks ago, and now it's at 28. So the bulls have really plummeted. That's what we want to see. That's a bullish sign. I put it on the far right end because in reality, you typically want to see it a little bit lower than 28%, but because we're in a bull, I'm going to put this in the positive camp. And I would say that it has dropped enough. Now, it doesn't mean that we can't pull back a little bit more. We could still, the bulls can be right and the bears can be right for periods, right? It's something that I don't use as a timing tool. I use it as a condition. And I think the condition here has improved enough that I wouldn't consider it a negative anymore. Up until this point, I really had felt like it was pretty important in terms of being a negative. All right. Now, we've got the overbought, oversold oscillator has dropped down. Let me just fix this really quickly. So we've got, we're around 33%. We were very, very close. And during the this week, we have been below the 30% mark. But currently, and we haven't finished the week yet, we got one more day. And you never know, based on what we've been seeing in terms of the volatility, that could shift. Before I start moving into all of looking at the actual chart stuff, I do want to show that the volatility is still negative on both time frames. We have a daily trend that is now negative, and we have momentum that is negative, and we have a weekly trend that has turned neutral, and the momentum is still neutral. The only time frame to the upside right now is the monthly, and the momentum is still good on that time frame. So I wanted to do that, and I'm going to take that down now. When we look at this oversold condition, we're getting into an area where you're getting the sentiment improvement, and this has worked off a significant overbought condition, right? So we should be on the lookout for some kind of a rally. Now, I mean, is it possible that was the low at 510? I mean, yeah, it absolutely is. But what we're going to do is we're going to use the smaller time frames to help us with that determination. We don't need to guess. We don't need to make a... See, most people want to make a market call and buy something without confirmation. And you can do that for sure. But I found over the years, you're a lot better off letting, especially that hourly chart, show you true signs of a reversal. And then once you have that, then you can start to get a little bit more serious. If you think you're going to miss, I mean, I know people feel like they've missed this great buying opportunity. But again, the way I look at things is I'm trying to catch the meat in the middle of the move. I'm not necessarily trying to pick a low. I want to catch where there's a high probability play. And that's where this period is, all right, until the volatility started to climb. And then we don't really want to be messing around. This isn't a high probability area to be playing to the upside. Now, it doesn't mean you can't, if you have trading skill, it doesn't mean you can't take advantage of that. I'm just trying to tell you, when the volatility is skyrocketing like this, I think you got to be pretty careful. I mentioned we had gotten oversold, and the odds are that we're getting close to some type of an interim rally. We've had one so far, but I'm going to show you why I think it's more of a rally that needs to be tested rather than the start of a big move to the upside. All right, let's go ahead and switch over to the different time frames. And what I've done here is I've got my 4 time frames up, but I've also put in the trend line, the most recent trend line, at least the one that I would draw. And if we start with the monthly, you can see we're still in a pretty quality uptrend. We made a move up, we pulled back, and we made a strong move to the upside. Now this might adjust a little bit as time goes on. If we get a pullback here and form a pivot and make another new high, then we would adjust the trend line to the upside. But if you notice right now, this trend line, by connecting these lows, is very, very close to the 18 on that time frame, and it's about the same slope. It's not quite as strong, and that's why I say if we make another move to the upside, we might tilt this up, and this might be moving up towards 500, and then the trend line would be, again, over very similar to what the 18 is doing. Notice that we have green DI in charge. We've got ADX above 25, and we have MACD confirming the move since the bull market started, right? We're making higher highs and higher lows with price. So we don't have any divergence in place on a monthly. Then one negative we've been talking about is that we were a little too far away from the 18-month line. I think if we can work our way back over the course of the next month or so, get a little bit closer to the 500 mark, maybe the 18 climbs a little bit, we get this a little bit closer to that 18-month, right around the 500, I think that would be pretty bullish. Especially where the sentiment is right now. All right, now look at what's taking place on the weekly. Now, again, all I'm doing is connecting these lows in the way that I talk about in my course, how to draw a trend line, all right? I'm not going to spend the time on that right now, but we have a clear trend line in place. And look at how we broke the trend line and we broke the 18 pretty close. I mean, it was a bar, maybe a slight bar difference, but essentially the trend line and the 18 are very, very similar. Now, what's taking place right now, this was breaking the trend line. It looks like we're forming a 2 right now, right? We're rallying up. Now, I'd like to see a pivot low form for a 2, but we've actually rallied enough. It's pretty close to the 38% retracement if it's not already there. I'd like to see it maybe finish off the week, and then if it's going to form a 2 and do something like that, maybe get a little bit more of a rally before we see any kind of a potential. And then what we're going to do, let's say we get a little bit more of a rally, then we draw a horizontal line here and a horizontal line here. And what we've got is a transitional phase, right? Let's say we're up a little bit more and we close like that next week or something. Let's just say that's where we're situated. So we've got a high here, and if we get back above that high, then we're going to have to adjust the trend line and start the process all over again, all right? If in fact we rally up and we come back down through here, then we've got the 3, all right, on this time frame. Now, again, I don't consider, because it's a single bar, I don't really want to consider this a low yet. I'd like to see this low taken out next week. And if it does that and then turns back around, then I think we could have a 3. But at this point, we've broken the trend line. We're certainly starting a transitional phase. And we have the MACD turning down from this point. And we've got a contraction phase developed in the DI lines. You see how they crisscross now? Clear contraction has formed. Now, that typically means consolidation. It doesn't mean we go bearish. It doesn't mean, it's not likely that we turn right around and turn bullish again. But it also doesn't mean we're going to, get flushed to the downside and start a big bearish move. It just means we go through a contraction phase. The uptrend that was in place is on hold for now. Now, if we start to look at what took place on the daily, this has been the most important one because we broke the trend line. And notice when we broke the trend line, notice how the trend line and the 18 were basically the same. This is really important information. Hope everyone understands how important the 18 is. The 18 is defining the trend in most cases. All right, now we broke that, we rallied up and formed a 2, and then we took that out. So we formed a 1, 2, 3 to the downside. So what do we do from here? What we do is we draw our downtrend. We now can form a downtrend. You see how we made a lower high and a lower low? We have our trend line in place. And then what we do from here is we're looking at the break of that trend line to be the one going back to the upside. As long as we stay below this, then we know we're in basically in a downtrend. Now, one thing that could happen is we could take this and go to a new low, and then we could accelerate the trend line this way. All right, so that would be the sort of the next thing to be on the lookout for. The one thing I'll tell you is that based on the way this has played out and the violence of the decline and the massive overrun here and the massive strength by red DI, keeping ADX above 25, we're not looking for a trend line break to get long. This is not the type of pattern where we'd get long on a trend line break. It's just not set up that way. So what we're trying to identify is a reversal on this time frame. All right, and it's just too early in my view. We're still well below the 18-day. We could even rally a little bit more and still be below that. And then what we want to do is see how it reacts at the 18, or maybe we form a pivot high before it even touches that. Because it was so extended to the downside, it's possible, maybe starting Friday, starting today, we actually start to see this turn back down. So this is something you want to be on the lookout for, but I think as long as we stay below the 18 and really below the trend line, we still have to have a downward bias on this time frame. Doesn't mean we have to go down dramatically, but it means when I say downward bias, I'm saying, look, I don't necessarily want to dive in and be real aggressive here, because that trend is to the downside. Now, there are times when you'd want to be aggressive on this time frame. In fact, what you would do is you would look at this and say, I want to go down to this time frame and get aggressive. But we don't want to do that here for two reasons. Number one, the momentum is too strong to the downside. And number two, we've broken the trend line on this time frame. We're in transition on the weekly. If we were above the trend line on the weekly and getting an oversold condition on the daily that didn't have momentum to the downside, then we could be aggressive on the hourly. You might want to just play that back again. It's just make sure you understand where I'm coming from. If this were still in a strong uptrend, then it could be considered, if there's not a lot of strong momentum to the downside, to go down to the hourly and play early. But we don't have that. And in fact, the way this looks to me is we've completed a 1, 2, 3 to the downside, and we're getting our first rally with negative momentum condition in place on this time frame. And we look to be forming an ABC rally back to the zero line with low ADX. You see all the strength in the ADX on the hourly, and then there's no strength here. So I like to anticipate, and right now I'm sort of anticipating that we take out this high and we form what would be considered a 1, 2, 3. But as I've said, when we have a 1, 2, 3 going counter to this, it is not that important. If we're going to turn this, we're going to need to make another higher low and another higher high, and preferably with ADX green DI confirming. And if that's the case, then I'd get a lot more interested in this market here. It just didn't play out off the bottom, and there was too much damage done on the higher time frames to want to play this aggressively off the low. All right, so this is pretty important. I think my subscribers have been asking me this, and I wanted to make sure I came across and gave a lot of information in this regard. But remember, we know that we're on the lookout for a reversal. So is it possible we could do the 1, 2, 3, form a higher low and confirm the reversal and do that here? Yeah, it is absolutely possible, because we got pretty oversold and because the sentiment has switched. We have to accept the possibility that this is just going to turn like this. We're not going to catch the absolute low, but this to me is not low price, but it's low risk. And that's what we're looking for as much as possible, is to find low risk entries. I think that's what we'd have to find. Now, don't be surprised if this just has a little bit more strength here. And then, now, if this takes out this high to the upside, What do we have? Well, we can now draw a trend line here, and we can look for, if there's no momentum improvement and we just get this up a little bit more, we could be looking for a 1, 2, 3 to the down, or a break of the trend line, especially if this is below the zero line, or hanging around the zero line, or straddling the zero line, and we don't have any green DI strength, and this is staying low, then we could be looking for a trend line break as a new signal to the downside to play this downtrend that's in place right now. All right, and maybe a move back down to 5,000. So I wanted to frame this out in both directions. Make sure you understand what we could be. We could have a better rally, could get more upside. I think it'll have a really hard time going to new highs, but we could get a better rally out of this based on what's the structure that's forming on the hourly. The problem I've got with it right now is it's just way too early to have any real confirmation. Too much damage done to the downside, and especially based on the weekly and the daily action. All right, let me know if you have any questions. Thanks.